Hello, everyone, and I hope you guys have had a wonderful weekend. And this is my market review. And the time right now is actually 2:06 a.m. on the East Coast, and it is now February the 7th, 2022. It's a pretty late one. Had a busy weekend this weekend, but I wanted to try to get this out before the opening bell on the morning of Monday to February the 7th, 2022. And this weekend, I'm going to start off with by taking a look at the Russell, because the Russell 2000 normally gives you, tells you the story of the other markets ahead of them reacting to the same way that the Russell 2000 has been reacting. So let's take a look at the Russell. Starting off with a 1-year daily chart of the Russell. And here is that 1-year daily chart of the Russell. And what you'll see is that the Russell has been in a decline, in a steady decline over since November. And looking at this daily chart, you can see the Russell hit its high, hit a peak around November of last year, got up to its high as 24.58, and since then, see the Russell's been in a decline. So what we look for when we see these declines that's starting to be a steady decline over time, start to look for the breakdown on the daily chart first. And what we look for is the crossing of the moving averages as price action continues to pull back, rally, pull back, rally, pull back, rally. You notice that we're starting to create these lower highs and lower lows. And you also start to notice price action start to drop below all the major moving averages. And that's when you know you're definitely in a longer-term downtrend, hence from a longer-term downtrend to an actual bear market. So looking at these highs, every time we hit a pivot point or rally point, you'll see that the Russell has slowly but surely started to reverse and drop below major moving averages. Here, I just highlighted there, we dropped below the 50-day. And if you notice that this yellow line right here is my 20-day, notice that the yellow line crossed below the blue line, which is my 50-day, right around December. That was a sign right there that we're probably heading for lower prices on a continued basis. We dropped, price action actually dropped below the 200-day during that time frame, right there, somewhere close to the end of November, and then it rallied, but it did not rally back up to all-time highs, only rallied up to where the moving averages crossed, where the 20-day crossed below the 50-day, and we stopped and we reversed again, dropped back below the 200-day again, and then price action rallied again, only to run into resistance right around the 50-day and the 200 and the 20-day again. So now we see that the 50-day and the 20-day is acting as a strong area of support. Strong area of resistance. So more than likely that trend will continue until we start to get the moving averages to cross below the 200-day, which is what happened, finally happened. The 50-day crossed below the 200-day, which is considered a death cross in the trading and investing community. We got that death cross right around here, around January, around the middle, towards the end of January. And as you can see, price action, as soon as we started to see the moving averages cross below the 50-day, I'm sorry, the 200-day, price action to the downside really accelerated on the Russell. So we got that crossover first with the 20-day crossing below the 50-day. I'm sorry, the 20-day crossing below the 200-day. And that happened right around here. And when that happened, you can see that price action really accelerated to the downside. Price action tried to rally here, got muted right by the 200-day, ran into resistance. At the same time, when the 20-day crossed below the 200-day, and then sent an acceleration to the downside. That gave enough fuel for the moving average to continue to cross each other. And now we have the 50-day that is also crossed below the 200-day. 50-day crossing below the 200-day, rounding up that depth cross, what they call it, when a 50-day crosses below the 200-day. So now we're in a definite downtrend, definite bear market in the Russell. And what you'll notice is that when prices are starting to go down, on the daily chart first, you'll start to see all the moving averages, once they cross each other, you'll start to see the opposite of a bull market. So you'll start to see the lowest moving averages lowest moving average on bottom becoming a strong area of resistance for price. As you can see right here. And you'll see the next one in line. So we got the 20-day now on the bottom, pushing price down. We have the 50-day right above it, which would also act as an area of resistance if for some reason price was to break back above a 20. And then you have the 200-day right above that. So when you have the moving averages in line that way with the lowest one on the bottom, and you got the 50-day and then 200-day right above it, you know, that the roles have changed. The roles and the direction of the overall market has changed from a bull market to a bear market. So it would be hard pressed for someone to find a sustainable rally in the major indices in this type of environment. It'd be best to protect your positions and be very careful of what stocks you decide to get into for a longer term bull run until the role changes. And we may be in this position for a while. Now, stretch this out just to show you how it looks when the bulls are in control. And as you can see to the left of my screen, you see the 200-day on the bottom, the 50-day next, and the 20-day right above that. When you have that wide divergence and when you have those moving averages in sync that way, and as long as they stay, you know, with the 20-day on top, 50-day in the middle, 200-day on the bottom, you know, you're in a strong bull market. I mean, you're in a strong bull market. But when they start to converge and get tight, you know that there's a change possibly in store. And we started to converge and get tight right around, and it's been a while. We started to converge and get tight early part of 2021 with the Russell. Started to converge and get tight with all the moving averages. Early part of 2021, as we can see there. Now the roles have changed. We got a bear market that is in place within the Russell. Now, if we look at a weekly chart, and this is one we really need to pay attention to, which can really tell you what the longer term pattern is, because the weekly chart is starting to look just like the daily chart. Price action is starting to drop as we continue to head downward. Price action will run back into these moving averages and continue to fade. And we're just starting to get a possible cross of the 20-day below the 50-day on a weekly chart. That is a strong sign that we are definitely in a reverse downward, probably for the longer term. And if we take a look at a monthly chart, you also see price action starting to dip below a major moving average, dip below the 20-day, right along here. And I'm looking for that to continue over time. So we could be in store for a longer term downtrend over the course of 2022. So that's something that you got to be mindful of. Now, I started with the Russell because I want you guys to see how the Russell is like a leading indicator for the rest of the indices. So if you take a look at S&P 500. See, the S&P 500 also starting to show similar action as the Russell. Yes. So we're just starting to really start to show signs of a downtrend in the S&P 500 too. So now S&P 500 has got that cross of the 20-day below the 50-day, and we got that. I want to say on daily chart, we got that right around here. And again, when we normally get that cross, there's an acceleration to the downside, as you can see with this price action here. Acceleration to the downside until we find some type of support before the market rallies again. And then normally, after you get that cross, when price action rallies next, normally it runs into resistance right at that 50-day, which is what happened here. And it looks like we are starting to head down again. So like that 50-day is going to be a strong area of resistance. If we continue to, next time we test that, if we do contest it again, we'll probably see the reversal right back down. And then the next move we'll probably see is a break of this trend line here. So we'll see reversal, then we'll see price action break and go below this support level that we hit and pivoted on back around January 24th. We'll see a drop below that level, probably in the very, very near future. So you see that the Russell is normally a precursor of what's to come for the Dow, for the S&P, and for the Nasdaq. So that's our daily chart of the S&P. Bear with me, folks. My computer's starting to run a little slow here. All right. So now let's take a look at a weekly chart of S&P. So here's a definite break-in trend that you can see on the weekly chart. We have price action that's breaking below this upward channel that the S&P has been in for a long time. We drop below that channel here, and he's starting to have price drop below the 50-day, below the 20-day. That's just a slow sign that the market is bleeding downward slowly. And every time we get these little rallies, these two little rallies in the weekly chart over the past week or two, only back up to the 20-day moving average and look at that long wick. Bears right back and push price action right back down. So even though we had a nice little week last week, wasn't nothing to write home about because it didn't really make up any big ground. Only back up to the 20-day, and it's like price action is starting to reverse right there. Now let's go right to our we can get this to cooperate. I have to end this session a little early, folks, because my computer is freezing and it doesn't want to cooperate, but you get the general idea that we are definitely in a downtrend. Here's a weekly chart of the Nasdaq, and as you can see, price action has dropped below the 20-day, and now price action has dropped below the 50-day, rally back up to the 50-day. 50-day and the 20-day is acting as a level of resistance. And here is a 6-month daily chart of the Nasdaq. Folks, we're definitely in a downtrend. You see, again, price action right here. That was back in the beginning of the year, January. We got the 20-day crossing below the 50-day, and then what happens? We get the acceleration to the downside. Then we get a pause in the downward action. Then we get a rally back up. We drop even price action dropped below the 200-day as well, and also we got the drop of the 20-day below the 200-day in an accelerated fashion. So that's a big time downtrend. Then price action rallies back up to, guess what? Just the 200-day and gets rejected. And look how close we are before we see the 50-day cross below the 200-day on the daily. So we definitely in bear market territory on all the major indices as we speak. And looking at the the Dow Jones. Same fate. Dow Jones is like the last of the Mohicans to start to really pivot to the downside. So we got to rally in the Dow, back up to the 50-day right here. That's going to be a strong area of resistance, folks. Look to see the Dow to really start to commence to the downside on this week. As we run into resistance at the 50-day, don't think price action is going to go much higher than that. You're going to get a reversal, and then we'll probably get a break of price action below the 200-day, and then we'll get break of the price action below this previous low. And then we'll start to see the 50-day whenever start to turn downward as well, and eventually see the 20-day cross below this 200-day in the near future. So this downtrend is definitely strong, folks. Look forward to stay strong for a minute. If you look at the monthly chart, shows that we really haven't got started for the longer term trend to the downside. Look at these major indices there. On a monthly chart, they're all still trading above major moving averages, which I see that really fading as we go through the course of the year 2022. Once we start to see price action really starting to accelerate down on the monthly chart and start to hit some of these major moving averages, then we'll start to pay attention to possible reversals in the market. But we got a long way for that to happen. So this downtrend is probably going to continue to stay with us. It's going to be strong. And so that means every time we get a huge rally on these daily charts, they're probably going to run into resistance and get sold. So just be very mindful of that. Right. All right. Now let's take a look at our VIX. All right. So here's our VIX. Okay, the VIX is just the opposite of the S&P. So what's been happening in the VIX is that every time the VIX has hit a high level and gets sold off, it hits support and it starts to rally. So that's what we're about experiencing the VIX now. So the VIX back at the beginning of the year got a nice strong push, nice strong bounce off a level of support when we was trading right around the 17, $18 level, all the way up to 38. Then the VIX pulled back, and guess what? It did not create a lower low. It stopped right around $20. So right around between that 20, 23 level, VIX found some support. It's been trading sideways around the support level just above the 200-day on the daily chart over the past week or so. So the next move I'm looking for is a bounce in the VIX, and a strong bounce to rally back up and break this previous high of 38. So we could probably see the VIX over the next, before this month's out, rally well above $40 and maybe even 45. So that is the trajectory on the VIX. Now let's look at the tool that tracks the stocks. Look at the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. It's another market breadth indicator. Look at the overall breadth of the market. Now, I told you guys a while ago, this tool has really been giving us advanced warning a long time ago when it started to break down back in April of 2021. So this was started to break down a long time ago, back in April of 2021. Let's see if I can go back and show you guys. So here, back in April 2021, look left of my screen, you can see we was trading as high as 97% of the S&P 500 companies were above their 200-day moving average. And since then, it's been in a definite fade lower and a definite bear market. The percentages have been in the bear market. So, and every time we have tried to rally back up towards that 200-day, we've been getting rejected. As we can see here, as we can see right around here, pull back again, and right around here, the strongest rejection was moved back up towards that 200-day back in December and got a strong washout right back down below that 200-day. and found some support when we got to as high, just as low as about 35%. It's 35% of S&P 500 companies trading above their 200-day moving average. We hit that level back in January. And then we got a nice strong reverse, but could only muster a move back up to its 20-day, and we're starting to reverse again. So the breadth of the market is showing some just definite, what's happening beneath the surface, that these stocks are really starting to fall below their major moving averages in a big way, and more stocks start to participate in this downward move in the overall market. As of Friday, this past Friday, looks like we have ended the day with just about 48% of S&P 500 companies still managing to stay above their 200-day. So that's over 50% that are not, folks. That is a definite reversal in trend from this bull market that we've seen and been in since 2009. That trend is finally reversed. All right, so that's something to keep in mind. And one more, I want to show you guys one more tool that I like to take a look at, which puts the icing on the cake as far as the overall breadth of the market. And this tool, for you guys who follow me on Twitter, this is the Wall Street Journal Markets Report, which tracks the 52-week highs and lows. And you can take a look at this tool on a daily basis. And if you want the link to this, you can actually just go to my Twitter page. Just find Tim D. If you go to Twitter, look up at God's Child Tim, and you'll find my Twitter page. And this is pinned to the beginning of my Twitter page. You can always click this link and it leads you right to this particular market breadth report. And you can look at it every day. So I like to keep a look at this to see when the odds are starting to turn in favor of the bulls, but they have not been for a while. So it shows flashes, but once you really pay attention to the highs versus the lows, you'll say, okay, that's not a big deal. So right now, and it shows you the highs versus the lows of the entire New York Stock Exchange. Then it also gives you a tab that you can click on to show you the breadth of the market within the Nasdaq. So right now we're looking at the breadth of the market within the New York Stock Exchange, and we can see as of Friday, there were, this shows you the number of new 52-week highs. 67 stocks reported new 52-week highs, but then you scroll down to see how many created new 52-week lows. And would you look at that? 265. So that's a lot larger than 67. So, and this has been on a regular basis, folks. The new 52-week highs and lows, the lows have been outpacing the 52-week highs over for some time now. So you got more stocks creating new 52-week lows than you got stocks creating new 52-week highs. That is also a sign that we are in a midst of a bear market. Now switch to the Nasdaq. We have 48 new Nasdaq stocks creating new highs, and as far as new lows for that day, 355. So the new lows are definitely outweighing the new highs, and that's been happening day in and day out, probably over the past month. I've been watching this tool, which is a definite sign that we are in reverse mode, folks. And this is probably a unwinding of the bull market that we've seen since 2009. So this could last for a while. All right. All right, folks. So that is my weekly market review. Again, I do expect more downward pressure. Every rally that we have in this overall market is probably going to continue to see some selling pressure. And we may be in this for a while, folks. So you just got to pay attention and pay attention to what the overall market is doing before you decide to just go full force in a bullish fashion and see your profits grow. Protect your profits and be prepared for whatever is to come in the near future. All rallies are probably sold. So if you're swing trading this market, when you hit these moving averages on the way back up, be prepared to protect your profits. All right. Till next time, Tim Davis signing off. You guys enjoy the rest of your week. And I'll probably be doing some videos out the week as to some specific trades that I'm trading, just to give you guys some idea how I'm navigating through this market. All right, folks, enjoy the rest of your morning, and I'll see you guys next weekend.